Hey guys, what is happening and welcome to this video. So today's video is going to be long, but trust me when you're going to want to see this whole video, because this video is about the psychology of the market, how the psychology changes, how things change, sentiment shifts and things go down. And we're also going to talk about the past, what's happened and what we can expect going forward. Now, unlike realtors, we're talking about forward-looking things because they're always concerned about what's happened in the past. How many houses sold last month? What was the price sold last month? It's a seller's market, even if it's a buyer's market to them, because they're always looking in the rearview mirror. Now, for us as investors and people who want to buy homes and everything like that, who are on this channel and part of this community, we just want to be forward-looking. We want to know what to expect and where things are going to go. So anyway, guys, without further ado, let's go. All right, guys, just to let you know, I don't wear the same top all the time. I just filmed that other video, which will probably come out a couple of days difference to this one. So I don't wear the same clothes, even though I would wear this hoodie all the time. And I only bought it. I don't like brands. I just bought it because it's my favorite color, okay? Red is my favorite color. So anyway, guys, let's talk about first what happened in COVID and what changed and how we got into this mania cycle that we're in right now. And basically what happened, and I've written down some notes, and I tell you guys when I'm looking at notes because I want to be honest, I'm just transparent. But anyway, buyers wanted space, okay? When COVID hit and interest rates dropped, people thought, hang on a second, it's now more affordable for me to get into a home, and everybody flocked over wanting more space for their home office and everything like that. And we saw a massive shift outside of the cities and all the normal places where prices were exploding, and we saw it go as far and as ridiculous as you can possibly imagine. Take Windsor, Ontario as an example of that. And it just exploded, okay? And then the second thing that happened with that, which followed, was FOMO from first-time buyers, millennials, my generation. And I'm a young millennial, but my generation were the ones that suddenly jumped, and they'd been saving for years, and they were like, holy, I cannot watch these home prices run away from me. So as soon as bidding wars, home prices started rising, you started to see loads of FOMO get into the market, and that just inspired everybody to get in. There's been tons of fraud that's been committed. There's been all kinds of things that have happened as a result of the FOMO. I've seen it with my own eyes all over the place. The third thing that happened, which wasn't really talked about, and of course nobody talks about this, and that's why I'm on this channel reporting to you guys, because we talk about the things they don't talk about. And that is sellers holding. So sellers are holding right now. What do I mean by that? Well, COVID hit, and for people in big houses and for people retiring, they thought, well, at the moment I can't go out golf, or I can't do all the things with my friends that I normally do, so let's hang on to the place for a while. And who cares anyway, because prices are going up. And that's always the case, guys. When it comes to psychology, it's very, very easy for people to hold a stock, a house, whatever it is. It's easy to hold it when prices are going up. It's not so easy to hold it, though, when prices are going down, and we'll talk about that in a minute. So anyway, that happened. So sellers holding. So we had this low inventory, and then we had this mad, crazy demand. So the markets were just opposite ending, and that's why we saw prices just rise through the roof, okay? But the thing is, this isn't like a normal price increase. This is going well above what people can afford, well above the wages of average people, and it's pushing the cost of everything up. So you had those sellers holding, and then you had sellers not selling because of COVID as well, because of the pandemic. They didn't want people walking around their house and everything like that, so they just decided to hold off selling. And those people who were buying, they had reason. Remember that. They were looking for space, low interest rates. There was a compounding number of reasons why they were getting in the market, and up against those FOMO buyers, you just had the ultimate best recipe you can imagine, the perfect recipe for a storm of prices just going up. And now we're going to talk about what's going to bring it down, because the thing is, I could say somewhat that this is sustainable if you had inventory that was higher than what it is, and you also had sales, and the inventory, you know, maybe it's slightly lower, but sales are just really, really strong. But we just don't have that. That's kind of natural price increases that you see. But when you have inventory that just shoots through the floor and then you've got sales that go the opposite way, it creates this false price increase that we have right now. And that happens with stocks too. You'll see a lot of people who hold a certain stock, and then that means the demand for that stock, when there's any sort of demand, because so many people are holding, there's just not that many for sale. So that means that it pushes up the price. Guess what? And you can look at bubble stocks like Tesla for an example of that. So the thing is, what could happen next, and what happens on the other side of this? Because obviously we've talked and focused on this part that's happened, which we're looking in the rearview mirror, but forward looking now, what can we expect? Well, we can expect a couple of things. Credit crunch or liquidity crisis could impact the markets, and we're likely to see that because we're already seeing credit markets get the jitters on the back of what's happening in China. And we haven't even talked fully about what's happening in commercial mortgage-backed securities right here in North America, because the amount of fraud that has been going on is exactly the same as in China. Okay, they're not building it out of cardboard like they are in China, but there is massive fraud that's going to come to light. And then the second thing that could cause this market to turn is interest rates. Now, if interest rates go up, and I believe that they will, and that they'll start going up slowly, but then they will gain momentum because they'll realize that, hey, you know, this inflation was not transitory, and we need to increase interest rates so people stop buying stuff and have an incentive to hold money. I believe we're in a time that's akin to like the 70s and the 80s in terms of inflation. If you adjust the numbers to now, the inflation is the same because our balance sheets have got a lot tighter. So what we can afford has got a lot slimmer. And for a lot of people right now, they cannot afford the lifestyle they're living in, and they're going back into debt, mainly on their homes here in Canada, using them as ATMs because they think the price can never go down. And you can just see that by the growth in HELOC debt. And we've already seen the mortgage rate tick up 30 basis points at most banks, and we're now only sat around 60, 70 basis points away from where the 5-year fixed interest rate was before COVID. And as soon as those interest rates start going up and guidance starts changing, then those yields are going to be spiking even more, and you're going to start to see real problems arise there. And not only that, we've had a crazy number of Canadians who are taking out not fixed rate mortgages, but variable rate mortgages. And what that means is they're essentially getting teaser rates. I mean, we literally have teaser rates exactly like the US did in 2005, 2004 right now, where people are getting into mortgages rates as low as 1.29%. And in 6 to 8 months, that rate is going to nearly double, and they're not going to be able to afford their mortgage payment if they haven't saved enough. And going with inflation as well and everything else that's going on, it doesn't look good for those guys. The next thing that could turn it is demand running out. And bear in mind, these things can come at the same time or near enough the same time, just like we had with the buying side. So you can have demand that eventually runs its course. So demand runs out, and then guess what? Home prices start to slide, and then sellers who were on the fence waiting and holding because prices were going up, well, suddenly they'll want to sell, because guess what? They get fearful and think, hold on, yeah, let's sell right now. And it's exactly the same. We see this in the stock market all the time. they say bulls ride the escalator up and bears jump out the window. And that's basically saying because, you know, it's a slow, steady growth on the way up, but then when it comes back down, it's like a crash, because basically there's fear that people are just going to be losing, and rising interest rates and everything like that will just create a toxic environment for the housing market. So the thing is, that could happen, and then with that, we've already got construction slowdowns right now, which could be leading us into a recession. And when that happens, basically, that could be after demand runs out. You see a big construction slowdown. And then guess what? It's the same sort of thing. People are out of work. All of those realtors that they hired suddenly now have to look for real jobs. That could happen, and that will probably happen. I'm not going to lie. So look out for that, because Canada is even more reliant on the housing market than the US was at the peak of the financial crisis. And this is why it's so dangerous to have an economy revolving around housing, even if it's speculative. I don't know why people think it's better in this country if it's speculative. Look at China, and that's what happens when you have a housing market based on speculation, which is exactly what we've got in Canada to a lesser extent. And the other thing that we could have as well is rapidly falling prices. If prices go down very fast, people are going to get very, very scared, and you are going to see people scared beyond belief, and that might present a buying opportunity actually. And you'll be able to tell pretty quickly, just by how fast people are reducing prices and everything like that, that you can get deals even when the prices are coming way down. Because if people are under fear, you might be offering, I don't know, 600 on a house that's listed at 700. And that's how prices just come down so fast, is when fear ensues. And that will happen because you've got so much speculation that is based off this housing market. It's set up like dominoes. You've just got excessive leverage. We've seen on the Bloomberg terminal that came out that shows the growth of fourth mortgages in Canada is just accelerated. The amount of people getting fourth mortgages in Canada is way higher than the US, and it's like quadruple that of the UK and Europe. So the amount of people who are over leveraged is just insane. But anyway, guys, I just wanted to explain this to you. I hope this makes sense. I really hope that you watch this video, understand it, go back, rewatch this video, because it's so important. The psychology and people's psychological feelings, how they feel and how they're thinking, really plays a factor in financial markets, housing markets, anything that we do. So anyway, guys, I hope you enjoyed that video. If you did, smash the like button. You know what to do. If you didn't and you're a realtor, you know what to do. Turn that like button and turn it upside down so I know how many realtors are watching. Anyway, guys, I will see you in the next video. Peace and love as always. Bye-bye.